For the longest of time, I've wanted to shed light on this topic of insurance planning, but there's a lot of regulations and fine prints behind it. I don't want to just find out from people who are already in the industry or sift out content that's available online written by people who may or may not be even in the profession and then sharing it to you guys over here. Today, I'm going to analyze the insurance plans that I've bought 4 years ago as a fresh graduate holding a full-time employment in a corporate job with the lens of someone now who has just gotten certified and what will be changing in terms of my insurance coverage now that I'm 28 years old. I don't claim to be someone who knows it all, similar to lawyers and doctors in the profession. To be good at what you do, it takes time and experience. Hopefully, the way I analyze my portfolio today will give you some form of insight and help to not just rely on someone who's already in the profession when it comes to your insurance planning. No one will ever care more about you than you yourself. So let's dive straight into today's video. Let's go. Rewind back 4 years ago in 2020. I don't know how, but at the back of my mind, I knew two things. Get insurance, get it while you're young. Being young and broke, the first thing on my mind was to find the cheapest plan possible for a decent amount of coverage. I know now that that isn't the only thing that you should be looking at, but more on this a little bit later. My close friend found an advisor that commented a lot on Seedly's forum, so we decided, why not? Let's hit him up. He gave us a proposal and we ended up buying a whole life insurance plan after doing some comparisons from other providers as well. But ever since then, we signed the contract. I've never heard from him ever again. It was affordable and the coverage was reasonable. The reason I chose a whole life plan over a term plan is because of the cash value that still sits in the policy. There's no right or wrong when it comes to choosing between the two, a whole life and a term plan. It's just what you prefer. Some people prefer paying for just the insurance coverage alone and then invest the rest. But back then, as a fresh graduate, I didn't know much about investments. My whole life policy provides a basic coverage of $100,000, and in the event that I pass away, my loved ones will get this payout, or when I have fulfilled the conditions of being total and permanently disabled, this payout will be made available to me and my plan will be over. I also have a critical illness or early critical illness component in this whole life policy that will pay me $50,000 if I get either a late stage or early stage critical illness, like cancer for example. This $50,000 payout comes from the total $100,000 covered. I know it can be a little bit confusing, but stay with me. Say I did a body checkup and I was diagnosed with late stage cancer. My whole life plan will pay me $50,000 and the policy will continue to cover me for life, but be left with only $50,000 to claim for death or total permanent disability. Another example, if I passed away, this plan will pay me $100,000 and it will end. This is the basics of my whole life policy, but I do also have a multiplier that adds on to this policy till the age of 70. My total coverage gets multiplied by 2 respectively until 70 years old. If you're confused by the time I've explained how my whole life insurance plan works, do not worry, it is confusing, I do admit. That is why your financial planner is supposed to go through with you and explain to you until you understand what you are buying. This is my whole life plan. Every single policy varies and what I have might be different from your policy. So make sure you do your readings of the policy document. Otherwise, ask your financial planner. If not, if you have any questions, you can always direct message me on Instagram. Hospitalization and its riders are pretty straightforward. You're choosing between private or public hospitals, the ward you want to stay, whether or not you want to be limited by the list of doctors under the insurers. I've gotten top tier coverage, meaning I get to go to a private hospital. I'm not limited by the list of doctors under the insurer's list. Even though it's expensive now, it's easier for me to downgrade in the future when it's not so affordable than to start with a cheaper plan from the start, because at the end of the day, hospitalization insurance insures you at a point of what your health is right now when you're signing the papers. So it's crucial when you get your hospitalization insurance when you're at the pink of health. I'm paying roughly about $600, but this is not to be benchmarked because every single year, your hospitalization plan insurance premium will change as you age. The next will be accident plan. Accident plan, I've talked a lot about this on the channel. I've even claimed it and talked about the experience because of my spine injury. Whether is it a fall or you've pulled something when you're exercising, visit the doctor and the relevant costs associated with that accident, you will be able to claim up to a specific limit depending on what your plan allows for. For mine, it's $2,000 per accident. So right now, at the age of 28 years old, why do I want to review my entire insurance policies? As your stage of life progresses, insurance needs will change as well. For example, getting a house, or you're getting married, or you're having a newborn baby along the way, your insurance needs will change. None of this has happened to me as of yet. There's a need that wasn't met at 24 years old, which was my critical illness coverage when my budget didn't allow for it. I couldn't afford, or neither was I willing to pay for anything more than what I was already paying. What the critical illness payout is for the loss of income for X number of years that I want to focus on recovery and any lifestyle changes because of the critical illness I've gotten. The first lump sum payout is very important to me. Imagine getting cancer. Everything that you have to deal with is entirely new to you. Having more money that is sitting in my bank account to just be able to spend without having to worry about anything else is better than working around a limited amount of money that I have. This is why I worked out my critical illness coverage to be increased by a little more than 5 times my annual income. Let's break down what's the entire insurance that I have as of today at 28 years old. From MAS, you can reference to this PDF guide over here. I'll put the link down in the description box. The rule of thumb, death and total permanent disability to be 9x of your annual income. Critical illness is 4 times of your annual income. And also don't spend anything more than 15% of your income on insurance protection. Later, as I share with you what's the breakdown of mine, it actually costs less than 10% of my annual income, and my critical illness coverage is a little more than 5 times of my annual income. So in this table, you can see over here, before I changed anything, I was only covered 200,000 on death and total permanent disability, and the times 2 multiplier actually ends at 70 years old. Critical illness, early critical illness is 100,000, but the new coverage as of today, right now, my death is a total of 270,000, mainly because I do not have children, and all this extra money, if I do die, go to my siblings and my parents. For total permanent disability is $200,000. Critical illness, I have upped it to $450,000. Early critical illness, $200,000. All of this lump sum varies according to what your personal preference is. If let's say I put myself in a position that I get my first cancer, I want to have this lump sum available to me to not have to be rushed to go back to work to gain a full-time employment income all over again. It will sustain me for the number of years that I need to recuperate and also just focus on recovery, enjoy life thereafter as well, because time will then not be on your side. So this is my entire setup. I hope what I've covered today has helped you in one way or another. Think about your own preference when it comes to your coverage you need. Whether you want to leave behind for the people you love, whether you have enough that will pay out to you in the event that you get a cancer or total permanent disability, etc, etc. My reason on why I eventually entered into this industry is listed on an article on my website. I'll put the link down in the description box below, but I just don't want anybody else to have the same sense of regret I had when buying my insurance plan 4 years ago as a fresh graduate. I'm not saying that all agents are bad. I've met very nice ones, and my hospital plan is actually still under my existing insurance agent. It's not going to be transferred back to me. I really enjoy working together with him. This is why I say cost isn't the only thing that you should be looking at. You should also be looking at who you're working with to walk through life with you and help you on your claims, on your process of meeting your needs when it comes to insurance planning. Now that my income isn't reliant on being a financial advisor, it is mainly coming from YouTube. At the end of the day, this is still what I'm doing as my main hustle. I hope today's video has helped you in one way or another. If it has, please let me know in the comment section below. If you have any questions, pop into my Instagram DMs as always. I hope you have an awesome week next week, and I'll see you guys in my next video. Bye bye!